GetCrack. Wake up, motherfucker.
Part of the day is Marvell, which gave a very disappointing revenue forecast. The stock is plunging. I mentioned the SMH is below its 200-day moving average. It's down 10% over the past month alone. It's down 20% from its high, which takes me to Broadcom, which is down again and reports tonight. How important is Broadcom's report at this moment?
I think all it literally would do is give it a little bit of a bounce. I think the dynamic surrounding the semis is well entrenched. We've negated a lot of the bullish trends. It looks to me as if NVIDIA has been the one name somewhat insulated from entering a significant downtrend. I'm not saying it's still in, the short-term uptrend. Longer term, it is in an uptrend.
Well, guess how much it's off. Guess NVIDIA is 27% off of its 52-week high.
Yeah, and I
guess how much Broadcom is?
Broadcom
27%.
Right. So, and those were the two names perceived to be the winners. Those are the two names perceived to be on the valuation basis the better one. So all I can tell you is we've been slowly reducing our exposure to semis. Given what I've witnessed in the current quarter, I can't imagine we would be increasing exposure to the semis themselves. We own 5 names at this point: KLA Corp, Applied Materials, Qualcomm, NVIDIA, and Broadcom.
This is a full-blown bear market. The median name in the SMH is right now in a 34% drawdown. The median name, which means a lot are significantly worse. I don't know that it's the all clear to just like close your eyes and buy them yet, because you could have oversold stocks get more oversold. This could be a downtrend that lasts longer. The median RSI among these names is still 41. I want to see that like 31 before I just say, you know what, I don't care what's going on, one of these stocks to buy. I just don't think we've gotten to the bottom yet.
But it's like, what is unique about this time period is Marvell. This time last year, they had $765 million in data center revenues. They had $1.365 billion. NVIDIA crushed numbers. AMD is crushing numbers, but the market's like, we don't care.
But this is why when you've had money coming out of semis, there has been more optimism about software. The great comeback that CrowdStrike had really took a beating the other day. UBS cuts the price target, Josh, to $425. It's only a $25 drop down, but nonetheless, this stock had been in a nice uptrend, and here we are questioning it maybe at the moment.
Yeah, look, it's in this cohort of high beta, high octane growth stocks, and when they sell 8 of them, the other 2 don't get spared. These things are traded in baskets. Also, you have a sell the news. You have a company that had really good earnings, but everyone expected them to really good earnings. You know that based on how much the stock had gone up over the prior 6 months. So that's really all it takes. Sell the news, profit taking, momentum washout. Why would CrowdStrike be higher? Makes no sense. What I do in situations like this, I already own it, so I'm not adding to it. I own it in the hundreds, low hundreds. But take the $361 mentally and just say, all right, it's a $36 stock. The average Wall Street price target, let's say, is like 420 to 440. Can a $36 stock recover quickly to 42? Yes, obviously yes. So it's a big dollar amount. The shares have pulled back in the last week or two, but in the grand scheme of things, we're still in a major uptrend here, and I would not be reacting to sell-side price target cuts.
Semiconductors, once one of the hottest investments in the entire market. Now, the group is being tossed around with the term death cross. Christina Partsinevelos here now with what is driving the sell-off as part of today's Tech Check, and can also explain what the death cross, and every time I say death cross, I'm going to say it like that.
Really dramatic and somber, I hope.
Death
but
cross.
Chip stocks. I got to talk about just the chip stocks in general, the paradox that's really facing this sector. You can have strong performance that's being punished instead of rewarded, and it's beyond chips, it's AI for that matter. But semiconductors right now are among today's worst performers in both the S&P and the NASDAQ. So you just mentioned the SMH. The 50-day moving average is falling below the 200-day moving average. So technically, that is called a death cross. It's a technical term, and typically all you need to know is it signals further drops ahead. It may not always be right, but it's usually a scary sign, hence the term. But custom chip maker Marvell Technology really is epitomizing this trend I mentioned. They beat on earnings last night as well as guidance, only to see its stock plunge 17%. The main excuse, the numbers weren't as high as institutional investors had hoped, or you could say buy-side boogie numbers, whatever you want to call it. Or as Wells Fargo put in a note today, stonks are gonna stonk, but this is an unwarranted reaction in my view. Same story, though, with optical supplier Credo Technology. They had revenue growth, they beat guidance. The stock dropped 14% yesterday, down another 12% today. Even industry leaders aren't immune. Both NVIDIA and AMD reported earnings and forecasts higher than estimate, yet you saw their stocks retreat after the earnings report, and investors really nitpicking details like gross margins for NVIDIA. NVIDIA right now, you can see, is just down quite a bit, having the biggest point impact on the NASDAQ 100 today. You got Broadcom, another drag on the NASDAQ today in terms of a point weighting stance. It stands poised for similar treatment after hours today. Their earnings are out. The stock carries a valuation higher than NVIDIA, adding another layer of investor hesitation going into this name. So many argue the strong fundamentals for chips as a whole are already priced in, while new regulatory concerns like tariffs, chip bans, AI diffusion rules really keep investors cautious, Brian. And in today's hyper-scrutinized market, stellar performance no longer guarantees enthusiasm.
No, at this point, tomorrow.
The leadership of the U.S. In the global financial system as it transitions into the Web3 format will probably be an interesting topic to discuss. I also know there's two key pieces of legislation in D.C. right now around the stablecoin bill and market structure. Those are likely topics to be discussed. But from what I can tell about the administration's goals and David Sachs' statements and kind of the direction there, I think the general direction is how do you create a level of leadership from the United States in the Web3 economy? And how does the U.S. financial system, as it transitions into a Web3 blockchain-powered format, how does it remain the dominant leading financial system in the global system?
Speaking of the global system here, what would really move the needle? Because there's so many things being discussed that you have to wonder what should take priority. You have the lawsuits being dropped, and on one hand, that would certainly increase activity, but a strategic Bitcoin reserve, should that come before other things, such as stablecoin legislation? Arguably, a lot of the industry would have wanted to have that conversation come up first.
Yeah, I think that the need for clear regulation from the market structure bill and the stablecoin bill are topics that allow the U.S. financial system to clarify and adopt blockchain technology beyond whatever's in the reserve, right? So the reserve, I think, can serve as a backstop for an asset-backed kind of view of the U.S. economy or the U.S. dollar. And so the reserve has its own role to play, just like a gold reserve has its own role to play. Then there's a number of mechanisms and questions around how do you create the proper regulation so that the U.S. is the financial system where critical base assets are generated and then repackaged across into other financial systems. And then you have various questions around compliance and stable coins and these things. So I think there's almost two categories of questions. One question is how does the reserve work? And another question is how does the U.S. financial system become the dominant force in the new version of the global financial system, which is powered by blockchains and smart contracts and Oracle networks?
I want to talk a little bit to you about this strategic reserve, this idea that, you know, there are a lot of folks in the crypto industry who say, yeah, we should have a reserve, but then you have the Bitcoin maxis who over the weekend and in the early part of the week spent a lot of time saying, wait a second, why are we seeing some of these lesser known digital tokens be included in President Trump's comments around this? What say you?
I think it's important to keep in mind what the role of a reserve is. So a reserve is almost like a backstop, and in the asset-backed view, kind of a way to justify the underlying security of an asset, like in this case, the U.S. financial system, the U.S. economy, the dollar, right? So what you would want from a reserve, in my opinion, and what you want from like a gold reserve is that that asset-backed view, that asset is inversely correlated with some other set of events, right? So if there's some set of extreme events, gold becomes more valuable. And so this is why the central banks have all been buying gold in record numbers. And so the crypto reserve, or any reserve, really has to create this inversely correlated relationship, right? You're basically practicing diversification. And so then the question becomes, once you define what the role of a reserve is, what is the benefit of including one coin or another coin in that reserve? And the fundamental answer to that is that it creates this inversely correlated relationship with something else happening that you're not currently protected against. And so the question there is, how does a reserve composed of these various tokens give you that greater assurance of being protected and inversely correlated and diversified against these other events? And it seems like the general idea right now is to have an index, right? So you have an index of tokens that basically create an inverse correlation on a holistic industry basis rather than just through Bitcoin. But Bitcoin does have a very clear thesis that it is inversely correlated with certain events in the state actor world, how the traditional financial system is developing. So I would view a crypto reserve as a mechanism for diversification and a way to create an asset backstop for the U.S. economy, U.S. financial system, U.S. dollar, and so on.
Sergey, there are quite a lot of U.S. dollars out there. Even in the kind of most extreme versions of the reserve that have been proposed, like Cynthia Lummis's plan to have the U.S. spend $100 billion of taxpayer money on buying Bitcoins, that wouldn't really be very big compared to the amount of dollars out there. How is this reserve actually going to help support anything? Or do you think it'll be much, much bigger?
I mean, you could say the same about the gold reserve, right? The gold reserve doesn't support anywhere near the amount of dollars in existence. This happened, when we went off the gold standard. And so I don't think reserves fundamentally function the way that reserves used to function. But I do think that at the same time, the thesis of diversification does make sense. It's one of the most basic kind of theses of the financial system and markets. And so if you're creating reserves, or you're going back towards the pattern of having reserves, and the sovereign wealth fund might be another one of these things where it's a pattern of some kind of reserves of some other assets, you would ideally, if you were making reserves for yourself or for your company, you would practice diversification. So the way that I view it is not that it has to one-to-one match with everything. That possibility is lost to us when we went off the gold standard. It's really, I think, a matter of what is the composition of a reserve. Right now, the composition is gold, which is definitely inversely correlated with various negative global events. Now there's another category of reserve, such as Bitcoin and whatever other assets that fall into the category of a crypto reserve. Mm-hmm. And then maybe there's another category of the reserve, which is the assets in the sovereign wealth fund. But I think if you add all of those up together with gold, you still won't meet the standard of one-to-one backing of every U.S. dollar. That's just not how fractional reserve banking works. That's not how fiat works, right? Fiat is let there be. So okay, we went off the gold standard and that's it. That was the choice.
Joining us now, Victoria Green, CIO at G Squared Private Wealth and a CNBC contributor as well. So why, Victoria, this dig? What makes gold or international so attractive right now?
I think it's unequivocally risk off right now. So you're looking for somewhere to hide a little bit, which I think dividends are attractive. Value stocks hadn't moved up. They weren't as expensive. You're looking to hide somewhere. You want to play defense right now. Get your health, your staples, your utilities that are not power focused, not AI focused, and find yourself some quality companies, sit around, clip your coupon a little bit, and let this all play out in front of you. Unequivocally, international is running, and it's something you might want to have a little bit more of a foothold in this year than you had last year. And then gold has just been a great hedge, and I think uncertainty is going to continue to rise as we play this chicken game of will we, won't we tariffs. So I look at those three sectors, and I'm kind of like Shaft right now. Can you dig it? Absolutely.
Well, okay, fair enough. I can dig it, and what I'm digging is this. I don't want to say dig like I agree, but I get what you're putting down, which is this. When I hear a guest come on and say, wow, you should go to dividends, maybe some international, and particularly gold, Victoria, to me, it kind of signals a little nervousness.
Absolutely. It's testing our middle right now. And I'm not saying you give up. I'm not saying you sell out, but I'm saying, look, we're testing the 200-day moving average. There's huge supports here. There's a lot of question if the Trump put does or does not exist. Is he going to let markets fall below pre-election levels? We're flirting with that right now. It's 57.12 was the day before the election. You've got the 57.30 200-day moving average. We can breach below it. We did that in the fall of 2023. But right now there's risk off and risk off in the technology AI sector. I don't think AI is dead. I do think it could continue to consolidate and see near-term pressure. So yeah, I want to hide in a little bit of quality right now. I think risk off, we're down, what, 7% from our highs a little bit, could accelerate a little bit further. So add these sections to your portfolio other than 7 stocks.
You were getting ready. I don't know if you heard the gang on halftime, but there was a really interesting, there's always interesting points made at halftime, but they made a point that the trade, I think it was Josh Brown who made the point that the trade from last year, 2003, was kind of over. Like, you know, just things go down. Guess what? Yeah, screw it. I'm going to buy the Mag 7 or buy NVIDIA and it'll go up. That's probably over. Would you agree?
I don't think it's dead. I'm not hurrying to play capital because I think you could have a little bit further to go. I think if you back that QQQ chart out, you back that NVIDIA chart out, and you say, look, long-term buying has been successful for 10, 20 years. If you're calling AI is dead, then you're calling this exceptionalism US bubble is dead. And I don't think we're there yet. I think you could actually see this volatility persist and a little bit more near-term pressure, but your long-term supports to me are still intact. So I'm not throwing in the towel on technology, and we'll see. I mean, Broadcom's after close today, and then you also have Costco reporting. Both of those are huge names on consumer sentiment and what's happening with AI and chips. But again, today's pressure on AI, Marvel wasn't a bad result, right? That was some of the huge thing causing the sell-off today. They beat on expectations and their guidance was in line. It's not like they missed. It's just right now, I think you're seeing this sentiment risk off, which when it's like this, I say, yeah, it's viable. It's not that the fundamentals have deteriorated in these companies. You just aren't seeing these blowout earnings reports because expectations are so much higher.
What's up, guys? What's up? March 6, 2025. Hey, Latino for Trump. Yeah, we better find that gold. I don't think we're going to need that, huh? So, Trump just signed executive order for the crypto reserve. So, sell the news. So, Bitcoin is down now from 90K to 87. So, let's see what's up with that. Tomorrow, I got a whole bunch of damn cash ready to go. Yeah, tomorrow's gonna be crazy. So we have 8:30 Eastern, the jobs report, payrolls for February. Then 12:30, you got Jerome Powell talking in Chicago, the University of Chicago, some kind of meetup. So he's gonna blah 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 there, and then starting at around maybe 1:30 is the crypto summit with Trump in the White House. So yeah, there's gonna be a lot of noise tomorrow. I don't know what to do. Like, so you see this? Yeah, so we got like this dip now. So I'm gonna be curious what's gonna happen tomorrow morning at 8:30 when the jobs report comes out. So this could go overnight like crazy. Who knows if people are gonna bid this back up or not. So everyone's selling the news right now. So if you look at the daily, we're still on a downtrend for Bitcoin. So, hey, it's not looking good. But if you look at the NASDAQ, QQQ, this definitely ain't good, right? We're down at 486 at the low today. So Marvell didn't help. Marvell earnings yesterday. But Broadcom earnings are up, but I don't think it's going to save it too much until we get the payrolls. Semiconductors down. See that? We're going to go down to that 194 level. Terrible. SMH. Let's see. Yeah. Okay. We are in a bad zone here. Probably 214 if we go that level. So you saw all the videos at the beginning of this show. Ooh, God. Yep. That's not going to be good. Let's see what else. So Friday is going to be a big day. Big day. I thought they got rid of... No. Latino. You can't get rid of Powell. Powell has his own special powers. That's what the Federal Reserve does. Federal Reserve is partial ownership between the government and the banks. You cannot get rid of him. Okay? The earliest Trump can reappoint him or get rid of him, if you want to say it that way, is May 2026. They designed it on purpose. Okay. I mean, he hired him, though. After he hired him, he got mad about him the whole fucking time during the 2016 to 2020 era, that whole era. So, yeah. Monetary policy is independent from fiscal policy. So you have to look at the charter when they started the Federal Reserve. There's a charter started by Woodrow Wilson. So you have to look at all the little nuggets there, and you understand like why everything is the way it is. We have a central bank. You know, the idea that was set by Hamilton, who's now black and in a play on Broadway. So they love Hamilton. They love central banks. So yeah, they set it up purposefully. So essentially, you got BlackRock and all those guys. I think the biggest, the New York Fed is the biggest one. I don't know which are the main branches that have accounts. I think you have a list on it. Yeah, you get a list. I mean, personally, there's better experts on central bankers. You can go on YouTube. You can find plenty of them. I think Tropes emailed me one already, but I don't want to go into the weeds right now. All you need to know is that monetary policy is separated from fiscal policy. That's the whole game. And an example of where a government controls both monetary and fiscal policies, that's China. Okay, so they're not going to allow that to happen anyway. So what was I doing? Let's see, SPY. Let's see where we're at. Yeah, I already looked at that. Bitcoin, already looked at that. So let's look at MSTR. So we've been trading this for the week. Good trade, up, down, up, up. It tried to get up here today, but failed. Very disappointing today. I was hoping the NASDAQ could hold it together longer than a few. Looks like it only held it up for an hour. Oh, damn it. So, yeah, very annoying. Very annoying. I could have got a nice day trade today if it went all the way up to the peak. But no, we had to pull back and goof around here at around 296 level, and we 304. But it's going to be down 5% right now. Bitcoin is down. So we got trouble here. See? We got to deal with this now for tomorrow. Okay? So we hit overnight at 92,700. Very close to the resistance level here. This green line that I drew. Very close. But then we had to pull back into pre-market. I don't know what happened with the market today, because it didn't look like Marvell was a big deal. But then overnight, probably starting when Europeans woke up, they started selling off, and it just like, oh, God, yeah, you get this thing. Now you're going to be dependent totally on payrolls tomorrow. Okay, so I have a bunch of cash ready to load, lock and load, ready to go. And we have to see if we break down tomorrow. If we do, then let me see. I'm going to put the QQQ up here. See? So at this point here, and if you guys remember, so the S&P 500, right? So now it's at futures, $5,763. We've sliced through. I drew this purple line about a month ago. Oh, sadly, because of all that DeepSeek tariff stuff, it didn't go as high as I thought it could. I thought this would be the optimum time to short up here if the S&P 500 got to 6,354. But nope, it decided to roll over on NVIDIA and continue down. So NVIDIA reported earnings here, right? And then we had the Max Payne, and we just fell through completely. And we had a volatile week this week. We had one green candle, but ever since then, Monday was down bad, and we've been going down ever since. Now, what this means is that we'll have to see if this thing can recover a bit, but that's all going to be dependent on Friday. A lot of noise on Friday tomorrow, all right? So we'll have to see about that. And yesterday I drew this thing. I said this is probably what's going to happen. So it's going to fight here. It'll try to get back up to like SPY, the ETF SPY, 592 to 596 before rolling over again. Okay, I don't expect good things in the coming weeks. So next week we'll have 2 inflation reports on CPI, PPI. Wednesday, Thursday, I think. And then on Friday, it'll be like close to the deadline for the budget. So I'm assuming there's going to be a lot of noise in Capitol Hill. They're not going to be ready to pass any budget. They're going to try to stall it, make some drama. You got a lot of political theater going on. So I think in 2 weeks, we're going to have a lot more volatility. Okay. So next week, don't expect any good things unless tomorrow is going to be good. But then if that happens, only expect something until Wednesday and Thursday. Then Friday, you're going to have that trouble. And then the third week is all hell breaks loose. Because Tuesday on the 18th, you have Bank of Japan with their interest rate. And then Jerome Powell again on the 19th. So back to back, 2 big central bankers talking it up. Watch the yen, watch the dollar, see what happens. If everything collapses by then, bye-bye. See ya. See you into April, into tax season. All right. Because we're already going into peak tax season. People are going to dump more as they have to replenish their accounts to pay the IRS. So don't expect anything until late April into May. That's the target. Okay, guys. That's it. Let's see what else. I got Zim today. Zim was popping. They had some news that the management was going to take over the company or something. So there might be some takeover news. It has earnings next week. So I don't know if it can break out and go to 30 or if this is the end for Zim. So watch that one, ZIM. And let's see what else. ASTS. So I wanted to talk about 2-3 stocks today. This is going to give you an example. Okay. So ASTS still looks good to me. Okay. You have this creek, this down move here. This is called a creek in Wyckoff parlance. And then you bounce up and then you're ready to go, ready to jump out. But of course, this is going to be a new high. Okay. We haven't been this high ever before, or once it breaks out of $38. Now, if you look at similar looking charts, so look at Affirm. Affirm had a similar looking thing, right? You had this going down like a creek, you bounce up on news, but then you move up, you get to the next resistance, and you bounce out, and you get to the next level before falling back. Okay, so you need to see some good positive looking structures here, but we don't see it right yet. ASTS still has a ways to go. I got to see something that proves to me that this is going to go higher. Now, the market is not doing well, so I don't know if this is worth a gamble right now. I have positions here. I bought here at 26. Should I add once it gets to 38? Let's see what happens tomorrow. Now, the other thing I would want to show you is Peloton, PTON. You see this? It had a little creek here. It bounced up. Earnings, you got that. But then what happened? It just rolls over. So there's no guarantees. I give you one example when it actually moved up to the next level. I give you this example where it failed. It tried to go up. It couldn't even make a new high here because this was the last new high at $10.66. And then start rolling over. And then not only that, it goes below the daily moving averages here. And then it goes below support here and another support here. Guess what? Bad news happens. So there's no guarantee. But you should be able to look at patterns and recognize them, right? They have similar looking shapes. They have a creek. They jump up, usually on news like earnings. And then they have a temporary move up. but it's not in the case where it's not always the case where it just rolls over or it just rise up. You don't know what's going to happen. Okay. Let's see what else. What else to say? Oh, lunars. Yeah. I was talking about this one yesterday. I was saying like, well, if it could go up here before it showed its landing, but guess what? The market was still too weak. It didn't pump, and then by noontime they realized they couldn't talk to their lander. Something went wrong. I think after hours it's down another 30%. Like, this thing is dead. Okay, so there was no gamble here. Let's see, unless you go short, I guess. See, I guess it's going to open around here at this $7.60 level. I'm definitely not touching it. Now, if you want to look for a short, though, I said on Friday, short AOI, because you had earnings last week, okay, and you had no result. It couldn't figure it out. And then it went down on Friday here. Okay, so that's a bad sign. I said, ooh, this green candle was very significant. It's now testing the halfway point of this candle. And then on Monday, it slammed down. And today, it slammed down again. Now, I think eventually it'll get to $7. Now, it doesn't mean, like, if you're late to the short, I don't know if you want to wait for it to try to recover a little bit before shorting, but I mean, Antoine probably got some options. He probably figured out what the best way to get some options to short this thing down. But yes, the target is, if you're short, is $7. I'm not doing this, but I'm just telling you, like, hey, I said, if Martin Shkreli was so interested in shorting a stock, it would be this one. You have this top here, and then you just have this rollover, and you just keep making lower highs. Guess what? It's just going to roll over and die. Okay. All right. Anyway, let me see what Bitcoin's doing right now. Okay, still at 85. All right. Yeah, tomorrow's going to be interesting. I'm going to be watching this sucker tomorrow. So I have a whole bunch of cash ready to fly. I don't know what to do about that, but I'm just going to stick with MSTR. It's been the big play so far. Okay, guys, I'm using MSTX. Now, hopefully, I don't know. Hopefully. I'm just hoping, right? We can get to at least 40 or something like that here on MSTX, the leverage. Let's see. So this thing was here. Let's say we're down. Let's say it opens in a bad spot. Okay, let's say it goes down here to this point, halfway in this area. We could get like a 15% from that point, from 287. Okay. So let's see if we can see. Let's say it goes down about 10%. Okay. Okay, let's be more conservative. Let's do 12%. So let's say it gets to $28 here. Say about $28. Then maybe we can get a 30% move to 36. Okay, 28 to 36. How about that tomorrow? I don't know. That's what I'm preparing for. So let's see what happens. If this thing recovers too fast, though, I don't know what it can do. I mean, if you got pre-market, you can go risk it then. But yeah. Let me see what else. So I covered that. So I mean, cold corn, ASTS. Good. Okay, sound. That's it. I think for now, that's it. Yeah, so the weakness right now, we have to see if this thing can recover to 503 tomorrow. That's going to be it. Yeah, that's going to be it. Okay, guys, for NASDAQ QQQ 503, 497. It better penetrate through that tomorrow morning. Otherwise, we're stuck. Here, the same thing. This is last minute here. So we closed at 572 on the SPY. You better not go below 569. Okay. All right. So I'm going to play a video. Yeah, I'm going to play a video for you guys. This one is from George Soros's lackey, I think. They had an interview. So I'm curious to see what they say.
did you ever imagine that we'd be here 6 weeks into the Trump 2.0 era and the Dow is flirting with negative, the S&P 500 is down 2.5%, the NASDAQ is down 6+? Did you?
So I would have thought that the markets would have held up better, but I would also not have thought that we would have had the level of frenetic activity out of Washington. And when we look at the headlines over the past 24 hours, they've been kind of breathtaking in speed and scale.
I'd like to point out, because some of you here may not know, or perhaps you've forgotten, that the Treasury Secretary, Scott Bessent, once had Don's job as Chief Investment Officer. He worked at Soros in the 1990s under George, of course, and also under Stan Druckenmiller, and he returned as the CIO in 2011. You arrived in 2017, a couple of years after he left, right?
I arrived about a year after he left.
I bring this up not just to establish a distinguished lineage, but because it serves as a useful reminder that Scott Bessent has to be, right, the most market literate and market savvy Treasury Secretary since at least Bob Rubin, and perhaps in American history. Now we have a president whom we know thinks of the stock market as a daily report card, and a Treasury Secretary who's laser focused on macro indicators. Why is that important?
So a couple things. Scott is incredibly smart. He's capable, and I think he is the most market savvy Treasury Secretary we've ever had. I think it matters because when he says something, you should take him literally. So he has said he and Trump care about the level of 10-year treasuries, and I think he will pay very close attention. In a kind of perverse way, right after the election, we had the Trump bump, and as Eric pointed out, we've had something different in the past week or so, and you've seen that 10-year Treasury go from 480 in the middle of January, where they were getting nervous, and if you remember, they kind of backed off some of the tariff timing at that moment in time. Now you have a 10-year Treasury that's down at the 412 level. And I think they should be getting a little nervous. I think the one thing that market participants maybe have underestimated, in the first term, we all said Trump is very SPX sensitive. And that was invariably the truth. I think with Scott, I think their pain tolerance is different. And I think they're more sensitive to a broader set of asset classes. And I think they might believe that ultimately they have more levers to pull when and where they need it. That said, when you think about tariffs, we can all look at a textbook and we can say, and I think the Treasury Secretary said it today, manufacturers will absorb the price pressure. And then you can also argue that it's a one-time price shift. But I think what you can't control is consumer confidence and corporate confidence. And I think that is what is falling off a cliff right now.
Do you think, Dawn, that the market is correct to be, as of now, pricing in 3 rate cuts in 2025?
So I would take the other side of that bet because, again, I think ultimately they will bear more pain than I think market participants originally thought, but there will be a limit. And I think they will make deals.
There's a view in the market that Scott's preoccupation with keeping the 10-year yield low foreshadows a coming change in bank regulation. You know, if the administration wants to juice demand for treasuries, it could exempt treasuries from the supplementary leverage ratio, one of the capital penalties that the big U.S. banks have to pay. Do you think they'll go there?
So I definitively think that is going to happen. So when you look at kind of the net issuance of treasuries post-COVID, it's almost all been bought by the levered hedge fund community. And I don't think, first of all, that's not a sustainable kind of marginal buyer. and it also probably isn't good for market structure and market stability. And when you look at what came out of Congress last week, you know, the deficit is not going lower in any material way. So what I think they're going to do is they will change bank regulation and the supplemental leverage ratio, allowing banks to buy treasuries in ways that won't be regulatorily punitive. And the next step is they will try to take some leverage out of kind of that basis trade in the levered market. And again, I think this is where Scott understands the moving parts in ways that I think will ultimately be really helpful.
You've given us a couple of clues about how you might be trading the bond market. You take the other side of 3 rate cuts this year, but at the same time, clues about how you might be trading the bond market. You take the other side of 3 rate cuts this year, but at the same time, you think that the administration will be inclined to help lift demand for treasuries. How are you trading treasuries? Like what would you buy and where? And are you a holder or are you a seller at any point?
So we are a reasonably large holder of U.S. government bonds, but we're below our benchmark weight by a little bit. And what we've been doing is we've been using volatility as our friend. So in January, when the 10-year rate spiked, we were buyers of bonds at that time. And then now, as you've seen kind of rates go lower, bonds rally a lot, we're not taking profits. And you'll see us continue to build a position into that volatility. And I think you're going to see continued volatility. Again, this moment in time, rates are going lower, but I don't think that's going to be true for the next 4 years.
Volatility can be your friend. Is that? I guess I better put it this way. What's the best thing and what's the worst thing about trying to put money to work in this market?
Yes.
Yo, what's up? What's up? Sorry about that. I think StreamYard's cut out for a minute there. But anyway, I think that's a good place to talk about. She was saying like volatility is a friend, and they're long treasuries, US bonds right now. But she's also said in 4 years' time, she doesn't think interest rates are gonna be back as low as they were before COVID and all that stuff. So interesting. All right, let me see if the video works now.
Yeah, so we're technically we're an endowment, but we use the best of the endowment model and the hedge fund model, so we can react very quickly. And I think we're very good. I would argue probably one of the best in the world at connecting the dots across asset classes. And from our perspective right now, the volatility is great. I think market structure is still challenged in that liquidity at moments in time when there's a lot of volatility is challenging. So you can see a great trade, but sometimes buying as much of it as you want is easier said than done.
Do you have a favorite trade right now?
Yeah, that's a good question. So we are tactically, at the end of last year, we bought call spreads on Hong Kong equity indexes. And I continue to like that trade. So we're holding that position. And again, when you see kind of the micro and macroeconomic data coming out of the US and you see the data in China, I think you will see a tactical deal out of economic necessity between China and the US. And I think when you look at investors generally, they've left China for dead. So I think there's going to be money forced into that market. Again, for us, that's more of a short-term tactical trade than a longer-term position.
I feel like I have to ask you the requisite Mag 7 question. Those stocks are down about 13% or so from the peak in December. That was as of yesterday. I didn't check this morning. Probably down by more. Tesla's off, what, 40? NVIDIA's lost 24%. Are those buying opportunities?
Yeah, so I think the Mag 7 are, I mean, those are extraordinary companies with real earnings power, and the unwind here has been pretty violent. So I would take the other side of that trade.
And of course, we are witnessing some historic shifts in U.S. foreign policy. It would appear that the United States is to a degree abandoning Europe, perhaps embracing Russia and Vladimir Putin. Has that translated? Will it translate into great macro trades?
Yeah, so, you know, Russia's not that relevant from a trading perspective. When they invaded Ukraine, it didn't really reverberate through markets. And I think in the context of what's going on now, the only thing that's worth watching, in my opinion, in the context of trading markets is oil. And whether ultimately, and this is a big if Trump can negotiate a peace between Russia and Ukraine, whether part of that deal is Trump needs more oil, right? Part of what he's been promising the U.S. consumer is lower prices, and particularly lower prices when it comes to the gas pump. The U.S. really can't drill more. It's not in Saudi Arabia's best interest to produce a lot more. They need about $90 a barrel to balance their budget. So the lever he can really pull there is Russia. And one kind of wild card would be Russia dropping out of OPEC. And that would have a real impact on oil price in the context of moving it lower.
What about America ripping the security blanket away from Europe? You know, I could imagine that we've already seen, right, the Germans move toward spending. In fact, I think they found some flexibility this morning, right? 200 billion euros on additional 200 billion on defense. And we hear the same noises out of France. Surely that has to, you know, result in at least some bond issuance.
Yeah. So if you look at Europe, and if they end up spending the 2.5%, to 3% of GDP on defense, that's $175 billion a year. And when you think about the fiscal space they need just generally, the amount of bond issuance out of the EU and European sovereigns is going very materially higher at the same time when US net issuance is also going higher. So I think one of the things that we might see, and this isn't going to happen tomorrow, but I think it could happen in the next 12 to 24 months, is a failed auction out of Europe. I just think at some point, sourcing that marginal buyer is going to become extremely difficult.
Do you feel confident enough to predict which country will fail to sell enough bonds?
The two most vulnerable countries are the UK and France, in my opinion.
Don, there's a lot of Western money, including some of yours, trapped in bets on Chinese private companies. ByteDance, of course, tops the list, but there are lots of others. Could that logjam maybe start to break if Presidents Trump and Xi negotiate some kind of a deal, whether it concerns trade or whether it goes even beyond trade?
So I think there's a lot of people hoping for that, and as Eric said, us included, where we have private capital in China, and we've been, everyone thought these companies would come public years ago, and the markets just didn't allow for that. And if you remember, the Chinese government kind of closed that door at the 18th hour. So if there is a tactical deal between the U.S. and China, I think there's a lot of market participants, us included, that will hope that the private to public markets unfreeze and we can get some money out. I think if you get money out of privates, it's only going to be in that very, very tight top tier, like a ByteDance. And to be clear, ByteDance is probably the most largely held private company by real asset investors in the world. So there's a lot of people with that hope trade on.
This feels like a good time for us to wade into the public-private debate for a moment. Because for years, right, foundations like yours and endowments and pension funds and sovereigns have been plowing money into private equity Of course, they've had some trouble getting that money out of private equity over the past couple of years. And now private credit is the rage. And more capital, as a result, is flowing into illiquid vehicles. Why do you believe in liquidity when everyone else, right, from Apollo to BlackRock, is extolling the virtues and the benefits of private markets?
Yeah, so over the last, again, we typically are benchmarked against the typical largest U.S. endowments, but over the last 6 years, we actually let our private equity positions roll off. We still allocated to the best managers, but with a really high bar. So we lost about 1,000 basis points of exposure there, which, to be clear, has served us really well. And at the same time, we pivoted to public markets. And it's interesting. I think a lot of both high net worth and institutional investors pivoted to private markets in part because you didn't get a scorecard every day, and your Sharpe ratio and the returns looked artificially good. And by doing that, first of all, I think those investors are in a world of hurt right now, both in context of liquidity and in the context of they've massively lagged a equity market that has until the last couple of weeks been on fire. But the other thing is, if you're Soros Fund Management and you have a long-term perspective in public markets, you have a lot less competition because it's most of the active money is large multi-strat investors. So for us, the
Yo, what's up, guys? Sorry. Yeah, StreamYard is kind of funny today, but let me try to restart this.
Multi-strat investors. So for us, the capital allocated to public markets above our benchmark, we've annualized 650 basis points of excess return over the last 5 years. And I think it's because we play our own game.
What does that mean in actual numbers? 650 over what last year? 650 over what in 2023?
So it's always our beta benchmark is MSCI ACWI, and then we have the risk-free rate. So we don't give ourselves any credit for what you can get, by in money markets or what you can get by buying beta, and we assume we're at our benchmark weight in those. So add those together and then add 650 basis points. By the way, the thing that's pretty interesting is when you look at the last 2 years, your private equity has lagged by more than that. So you needed that active return in public markets to make up for the sins in private equity. But we think our peer endowments and foundations haven't had that offset.
So you're thinking more along the lines of a hedge fund. Tell us what you returned in 24. What are you year to date? And when you look at those numbers, do you think of your competition as Citadel, or do you think of your competition as the Ford Foundation?
So we think of both. Like, we want to be clear, we want to take the best from both of those operators, but we don't play Citadel's game. There is no one. Citadel plays the multi-strat game, and nobody plays it better than them. And I think the distance between Citadel and their competition has only grown. And again, relative to other foundations and endowments, there are some things they do really well, and we like to take those pieces. But again, play our own game and play a game that we think no one else in the world can do quite the way we do it.
Yeah, that was pretty interesting, actually. Yeah. Interesting. The sins of the private market. That's what she said. I'm gonna have to replay that for myself then. Yeah. Okay. All right, guys. So tomorrow, big stuff tomorrow. We gotta go look at that. She mentioned Tesla too, so might as well, or they mentioned Tesla. So let's see. Ooh. It's back at 263. I still haven't decided to add to this position. So I'm in TLSR. I added around when it Tesla was maybe here. What, 298-ish, 300-ish? So let's see, TLSR. Let me see. So if you were in that area, you're probably paying about $22. That's 617. So I haven't decided what to do here at this point. Okay, I still haven't decided to add or anything yet. This market still has to prove itself because tomorrow will be a big day. So I got my cash ready, set, and go. Ready, set. But to me, if you look at the NASDAQ, I guess that's 500. That'll be ideal. It ends on Friday up here at 503. Okay, NASDAQ 100. But guess what? It's going to be a real challenge to get back up to 518. Okay. Oh, so the market's going to be pretty terrible here. But let me go to something. Let me share something for you. So this morning I had like some DeMark indicator little seminar to teach me how to use it properly. So hopefully I keep increasing my knowledge. Now let's look at after hours. So we got Costco. Costco is up here, down about 1.28%. Okay. And let's see, Avago, formerly Avago, now called Broadcom. It was up 14%. And sometimes it does that, huh? Yeah, it was up around 15.7, maybe even 17% after hours. Now it's back down to 12.89 night. So let's see what happens tomorrow. That's not enough to recover the whole semiconductors. So if you look at SOXL, sorry, it's only up about 4.4% back to 20s. It's a long way from trying to get to 25. We got a long way to go. If you're on XOXL, to trade that, I'm still like, I got mines when it was like hit 20 and below. So I'm still stuck here. I'm still stuck in this like crap zone. See what happens tomorrow. Let's see. And HPE, so Hewlett Packard Enterprise, nasty, 20%. So overall, the earnings for tech companies have not been doing well. So yeah, this is terrible. Anyhow, let me tell you about the crypto stuff right now. Let's see. Just a few minutes ago, President Trump signed an executive order to establish a strategic Bitcoin reserve. The reserve will be capitalized with Bitcoin owned by the federal government that was forfeited as part of criminal or civil asset forfeiture proceedings. This means it will not cost taxpayers a dime. It is estimated that the U.S. government owns about 200,000 Bitcoin. However, there has never been a complete audit. The executive order directs a full accounting of the federal government's digital asset holdings. The U.S. will not sell any Bitcoin deposited into the reserve. It will be kept as a store of value. The reserve is like a digital Fort Knox for the cryptocurrency, often called digital gold. Premature sales. Let me zoom in for you guys. So premature sales of Bitcoin have already cost U.S. taxpayers over $17 billion in lost value. Now the federal government will have a strategy to maximize the value of its holdings. The Secretaries of Treasury and Commerce are authorized to develop budget-neutral strategies of acquiring additional Bitcoin, provided that those strategies have no incremental costs on American taxpayers. In addition, the executive order establishes a U.S. digital asset stockpile consisting of digital assets other than Bitcoin forfeited in criminal or civil proceedings. The government will not acquire additional assets for the stockpile beyond those obtained through forfeiture proceedings. The purpose of the stockpile is responsible stewardship of the government's digital assets under the Treasury Department. Okay. So that's what the news is. Also, we have some news. Texas Senate passes Bitcoin Strategic Reserve Bill. So this is just today, apparently. According to Bitcoin laws, a total of 32 Bitcoin Strategic Reserve Bills have been introduced in 24 U.S. states at the time of the writing. The U.S. Senate passed the Bitcoin Strategic Reserve Bill SB 21 in a 25-5 vote on March 6th, following a fierce debate on the state Senate floor. Texas State Senator Charles Schwertner, who introduced the legislation, argued for the bill and said it would help Texas shore up its balance sheet with a valuable, scarce asset. We don't have stacks of dollar bills and safes like we did in medieval times. What we have is digital currency. Okay, well, there we go. Ain't that interesting? Interesting, curious timing. So tomorrow, remember, Trump to hold crypto summit Friday. What do you need to know? Let's see. President Trump plans to hold cryptocurrency executives at the White House on Friday, a crypto summit that could offer new insights into the administration's agenda regarding digital assets. The event's attendees are expected to include the CEOs of Coinbase, Crypto.com, Robinhood, crypto wallet provider Exodus, and the chair of Bitcoin Treasury company strategy, MicroStrategies, basically, according to Trump's AI and crypto czar, David Sachs. Trump is expected to speak at the event. He last weekend said the U.S. could launch a strategic crypto reserve. Well, we already signed the executive order. Such a reserve would elevate this critical industry. Trump posted this on Truth social platform. I will make sure the U.S. is the crypto capital of the world. The price of Bitcoin surged in the wake, blah, 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 blah. Okay, anything else? Nope. That's it. Good. Okay. See what else for you guys. Let's see. See anything else. See if this thing has anything interesting to say. White House Crypto Summit on March 7th. Official invitation sent. Blah, blah, blah. Coinbase. Yes, we know that. So the summit, which will run from 1:30 p.m. to 5:30 p.m., I guess Eastern, will be a roundtable discussion featuring key figures. Okay, so that's it. That's your time. We have 20 to 25 attendees. Okay. So we got Kraken, Robinhood, Coinbase, MicroStrategy CEOs. All right. Okay, so that's it. So we know the time. Get ready. And you know that 12:30 will be Jerome Powell talk at the University of Chicago, economic, blah, 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 whatever. And you have 8:30 Eastern, before 1 hour before the market opens, payroll. So those things will affect everything. Get your cash ready if you're ready to trade. I don't know what's going to happen. It's going to be wild, I assume. Very wild. This has been a wild week, guys. I mean, I've been lucky that I just stuck with MicroStrategies. I didn't trade much of anything else. Everything else kind of just was like, bleh. So I'm going to show you the charts. Right, again. Make sure you guys know that. So if you look at MicroStrategies, yeah, it's been a good time. It's been a good time. I guess I should have shorted this one. So I bought on Friday at the low, sold here. I didn't buy exact low here. I just waited until it did something. I got here and I bought some more. Got here. Now today I tried to see if it could go higher. No, it failed. It went back down. Lame. But not unsurprising. But it held. At least MicroStrategies is above its support rectangle instead of below it. It's very hard to get above, okay, from below. It's very easy to go from above to below really quickly if you just don't bounce like you saw here in December, right? You dropped and New Year's hit and you bounce. Okay. This was my prediction, which was wrong. All right. This was like January. It would come back down, correct. But then the whole deep seek stuff happened and then crash on that Monday, that week. So it never got back up to 400. And then a week later, I said, well, you know what? Maybe I should short it. It looked like it was about to roll over, but I said, no, never mind. Looks like it's not going to short. Wednesday it came back. Then Tuesday, next week after the holidays. So if I waited a week and decided to short again, I probably would have made it because it started going down on Wednesday, February 19th. So I was a week too early in my prediction on shorting it. So too bad. I missed out on this move. Crazy. It's very hard to trade, I think. You guys got to just know sometimes you're just lucky. And you got to know your risk levels too. You kind of go like, well, maybe I don't want to take a trade right now when it's already almost at the end of the month. But here we are. We're at the beginning of the month. So let me show you this. Oh, hold on. With natural gas, let me mention. Today we couldn't make it above this resistance area at $4.45 per million BTU. So I didn't buy any coal today though. So if I want to short it, I would have bought coal again, but maybe I'll just wait till Monday, or maybe I'll just ignore it because I think I'd rather try to get in a boil. Okay. So let's see if Boil pulls back, BOIL. Let's see how much it can pull back. So if natural gas, let's say it just goes down from here to here. Okay. 10%, huh? If you're lucky. Unless it goes back down here, then it's more. It's going to be 20% move. Okay. 10%. So 20% for Boil then. So maybe it goes back to $78. Maybe I'll watch it then next week. I don't know. I still think it's too early to get back into Boil, right? We got to get closer to summer and more into spring. But man, this winter has been kind of crazy. It's really boistered itself up. And the whole tariff stuff kind of made natural gas a little buoyant than usual. Oil, however, still stuck. Yeah, we're at $66 here. I'm going to play Samantha LeDuc's video tomorrow, I think. But maybe I'll play a little bit for you here as a sneak preview. But right now the resolution is low. So if she pulls up some charts, they don't zoom it in. But maybe that'll be more interesting for you guys to listen a little bit. And I'll play more tomorrow. Oh, yeah, Mexico's done well. Good. So it's pretty much recovered from that scare there. EWW back at around $51.45. MEXX triple leverage 11.51. So whoever was buying at 9.50 or whatever, yeah, you did well. So every time it gets close to 9, you should buy some. I think eventually, yeah, Mexico will do quite well this year. I mean, look at China, right? Chinese stocks have done, and European stocks I mentioned yesterday. So a lot of the European stocks like Rheinmetall, RNMBY is up like about 100% year to date. Most of it due to this month's move from 146 to 258. Okay. So yeah, there's a lot of things to look at. SMCI still not, yeah. Yesterday it couldn't break out, and then today it followed the Nasdaq. Whack whack. And RXRX still at the bottom. Yeah, there's a lot of stocks that could be good, but the market is just not having it. There's just very few things you can do except trade. JD had earnings too for China, JD, but it looked like it followed the U.S. markets by the end of the day. Tencent will report next week. TCEHY. Oh, wait, what? Yeah, next week, right? Is that next week? Oh, crap. It's 2 weeks. Ugh. Oh, man, I don't got to wait for this now. Oh, God. Okay, yeah, they're 2 weeks away. Oh, terrible. It wasn't next week. Oh. Yeah, all right. Deere still did well. I don't know. This is my favorite long-term stock. So, Deere, DE. Yeah, I like this stock. I don't know. They seem to be doing quite well against the market right now. So, great. Good job. Good job. Maybe I'll buy more. Shoot. So for long term, I was talking about this one. This was great. So I might just replace like all my cash with Deere. So all the stuff I sold from Palantir, I just go to Deere. Yeah, from from drone AI stuff into freaking tractors. Yeah, great. Farming equipment. Perfect. I'll have to see what I'm gonna do. Socks L, yeah, like I said, like I bought it around like the 20s and lower, and now we're back here. Disgusting. I don't know if a Vago or a Broadcom tomorrow will help, but maybe I'll buy more tomorrow if it's good. But yeah, prepare for tomorrow. If everything sucks tomorrow, like the market just like wants to puke some more. Oh, so expect NASDAQ to go to 482. Now, if that's what's going to happen, then I don't even think the NASDAQ will have an easy time to get even back to 515 on the QQQ. What's going to happen is basically it's going to do this. It's going to go zigzag, zigzag for the next 2 weeks. And then something else is going to happen into April where it's just like completely collapses way down. Okay. And if we look at the SPY, yeah, I mean, oh God, SPY is even tough. Like maybe it can go to 563 and then bounce, but you want to have a bounce tomorrow. You got to get back up here for the SPY. You have to get to 586 tomorrow. Otherwise, there's no hope it can even like try and move back to 592 or something. It's just like it's just gonna roll over really quickly, I think. And it's gonna be a lot deeper, okay, the way it's gonna do it. So I'll show you this from the mark stuff. And what you'll see is that if March ends up lower, let me see. Okay, we'll see. Let me see if I can get something here. Let me show you. Symbolic. Let's see, I think I can get this platform. Okay. Okay, let's see. So this is a monthly. Okay. So you can see we hit 13, all right, in December. And now we're starting a downtrend here. But we're not done with the month. We're not done with this month. We don't know what the month will end. So if this monthly bar higher than this one here on November, so the close of this November was 602.89 on SPY. If this thing can somehow manage a miracle and rally all the way back up here and close at the high, then maybe we're safe for another month. But if March stays this week and we are below that level, guess what? It's going to follow that April's going to be probably bad. And then we're going to keep going down, 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 down for, oh, shoot. I don't think it's going to be like all the way down. Like each candle is going to be bad, like every month. But that means the whole year, the rest of the year is just down, 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 down until it hits like freaking 450. I don't know if it can hit that. Yeah, we'll see. We'll see. I mean, let's see what the propulsion says. 528 is the first level. Oh boy. I don't think anything's that clean, like it's gonna move down that clean. Whenever you start moving down, it's gonna be zigzag, zigzag, zigzag. It's never like a smooth like move when it moves up. When it moves down, volatility starts increasing, like it did here in 2022. You see this? It's not like all the way down like that because it's like fighting. Okay, down, down, up, down, sideways, down, down, up, down, up, up, down, up. Okay, then we got clear and then we started moving up in 2023. So to me, Yeah, it's not. It's just not gonna. But oh shoot! But it still can get 9 counts. It'll just be zigzag, 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 way down. For 9 months. So Samantha was thinking like August we would have trouble in the bond market because of the Treasury. Besant's gonna actually can control how much he's gonna sell in bonds at that time. Let's see. That's about 6 months away though. Interesting. Yeah, you got to game plan this out. I don't know. That's a whiles away though. Oh, it's gonna be a rough year, man. Okay, guys. I'm gonna start playing some Samantha LaDuke stuff. Okay. So it's gonna be a preview, a little preview. I'll play a little bit because we don't have like the 1080p. But let's hear her talk. This was a presentation yesterday, so this is as up to date as I could get it.
Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Hey, greetings and welcome to Options Power Hour. I'm Samantha LaDuke, founder of LaDukeTrading.com, joined by Hans Albrecht, our options educator, mentor, trader extraordinaire. He is very active in not only educating through courses and mentorship. You can find him LaDukeTrading.com/Hans, also working with our members in our Slack membership space, as well as posting his trades. So we come together and kind of look at the market. I try to size it up from a macro standpoint. I have this kind of collective trade mindset of dollar yields, oil, and then how it impacts volatility and equities. So we'll kind of recap some of what's going on right now in the world, not just tariffs, but the reaction thereof, equities. So we'll kind of recap some of what's going on right now in the world, not just tariffs, but the reaction thereof in money rotating. All right, so then we kind of get into options tactics around particular plays. We can also answer questions. So hit us up in Zoom Q&A if you have any questions, macro to micro and options structure. We'll give it our best shot. Hans, how are you today?
I am well, Samantha. Just, I guess we got a little update here, so that's nice for a change. But that's going to be typical of your volatile markets. You're going to get some rough closes and some good closes. So that's part of the scenery, I guess.
Yeah, we have a bunch of stuff going on as it relates to oil has definitely started to roll over. That is part and parcel of what the administration wants, but it may not be what oil companies want. That's a big focus that I have been on for the past few weeks because I sensed that we were going to have a pull down. The big level for me is 65. I can give it in crude. I can give a little bit more details on that, but the gist of it is if we start breaking below those levels, we'll get another deflation impulse. In the meantime, yields definitely came back down, the 10-year in particular, into a 4.2 area. It actually overshot and then ricochet rabbit yesterday on a little bit more of, this is a tougher one, meaning the tariffs were implemented on Tuesday, and then Lutnick was out saying maybe we'll repeal or revoke whatever, all. But we also have a situation where yields are spiking abroad. So we have this amazing downdraft in the past 3 days, especially with the dollar, the US dollar. So relatively speaking, the euro dollar and the pound dollar pair trades have been spiking very aggressively on stimulus. So over there, they're going to kind of have to go it alone. Trump wants to pull out of NATO, although that takes 2/3 approval of Congress. This is not just a directive that he can do, but he can pull troops out and he can pull money out. So it is a de facto withdrawal. But Europe is not going to take that line down. They could, but they don't want to. So they have basically rallied around Ukraine and basically committed arms, soldiers, money, and let the conflict continue. And the result is they have to fund it. So they have basically issued this promise of debt, and this has spiked their yields. Long story short, money flows, path of least resistance, where they can get the most yield. US dollar has been falling with yields, with equities, with oil. So money has been rotating abroad, not just in the China space, because they're also doing stimulus, a little bit different, not the same fiscal stimulus, but they are absolutely trying to increase their banks, their citizens' confidence, and their stock market and capital markets, I should say. So China's really doing stealth and direct stimulus. Europe is now doing, Germany taking the lead in direct fiscal and monetary stimulus continued. So their yields are higher and money, that dollar is dropping like a rock as money is flowing elsewhere. So usually we get a little bit of a tailwind here with dollar down and equities popping, but this is a little bit different. It's actually our 10-year. So as our 10-year has bounced yesterday and today, that's actually that kind of inflationary thrust for assets. Stocks like it. It's short term. I don't think it's going to last, but that's exactly why bonds pulled back, yields took a little bounce, bringing equities higher. And this is really, unfortunately, I don't think going to be long lasting, but that's the market we're in. We've got some oil, support right now that needs to hold. We've got some yield support, that 4.2, the 10-year US that needs to hold. And we have the dollar around 104.5, 105, which doesn't really need to hold because the administration really does want it to fall. But I can see a situation where as we go into FOMC in a week, 2 weeks from today, and we'll be live for that. And as we go into potential government shutdown on the 14th, we could get some support in the dollar. But for right now, these are some sharp moves in the FX complex that have basically taken our worry right now, short term, from VIX spiking. And that's what I want to turn over to you. We're going to have a conversation about volatility because I don't think it's done.
Yeah, and I think what you're really alluding to, what you're talking about is this sort of, we've really seen a series of 180s. There's sort of, and of course, markets don't like uncertainty. Volatility doesn't like uncertainty, although the VIX could be a little bit higher in my opinion. But 180s, Europe being sort of a trash heap, and Germany, German economy, don't touch it with a 10-foot pole, and now it's making all-time highs. And you've got stocks like Rheinmetall going to the moon, right? Because everyone's because of, I guess Germany just having to foot its own bill for defense and pay its fair share. And so you've really sort of got this interesting 180 kind of world of things kind of flipping on their heads, even from the standpoint of post-Trump election. Everyone was kind of, this is fantastic. It's all about, he's going to love the stock market. He wants everyone to get rich and make money. He's just, it's going to be a big party. And then, we had this sort of little interesting what's happened in the last little while. We've seen this we've shifted from this upside inflation risk idea from some of the things that Trump is doing to very, very quickly becoming a growth shock idea. So really kind of almost, I remember you and I, it wasn't that long ago, we were talking about, well, there could be even, some people are chirping about rate hikes. And now we've got 3-4 rate cuts starting to be priced in. And so this idea that the Trump put is really not there, or at least the Trump put strike price is way, way out of the money. I mean, it is out of the money. And who was it? Lutnick, he came out, I wrote down this quote here. He came out and said, over the medium term, which is what we're focused on, it's a focus on Main Street. Wall Street's done great. Wall Street can continue to do fine, but we have a focus on small business and consumers. We're going to rebalance the economy. He's almost, and Trump sort of chirped something about that too. They're kind of saying this, and it's interesting to me, is that, the gap has become too wide, the haves and the have-nots, and this sort of is a sort of ticking time bomb over time that they want to address. So I think there's sort of very interesting how they're going about it. And they're saying, well, we don't mind a little bit of a reverse wealth effect. And that's not great for markets, right? The market doesn't like the reverse wealth effect. It likes to go up, thank you very much. And it wants everyone to do just fine, be feeling richer from assets, either homes or market stocks going up. And so we're really dealing with this very, very new reality of something that could be a little bit more durable. I know the art of the deal involves, a lot of barking and saber rattling and then coming back and negotiating a little bit. But I think if you look underneath the surface, I don't know if you agree, Samantha, there is an effort afoot to really kind of toss aside some of the things that have been supported for the last 15 to 20 years, which is, hey, everybody just get richer and richer, and that's going to keep the economy going. And that is a threat. It's a threat to growth. It's a threat to multiple years of expanding record profit margins and companies being able to say, hey, it's inflation, don't worry, we can raise prices all we want. So there's a little bit of a threat to the market as we have known it for a little while now. And the question is, how durable is that going to be? I mean, maybe what if Trump just kind of tosses everything out and just says, you know what, let's go back to normal, which isn't going to happen. Does the market recover from there? Probably, but that's probably not going to happen at this point.
Actually, I think that we can have a very, very strong bounce. But first, we have to have honking big volatility. That's my my baseline bet. So I want to make volatility great again before we actually buy the dip. So first, let me just.
Trump's doing it. Trump's helping you out, Samantha. He's your partner in crime there.
Well, it's definitely chaotic. I mean, I do feel that, you know, the administration is chaotic. It's distracting. It's a lot of noise from the signal. We definitely have the deficits are still chaotic, which is the biggest problem. So the market will have a chance if we can actually get control of congressional spending, and that is not what's happening. So we talked about that.
So is that light at the end of the tunnel? Is at some point will the market
right
kind
now
of
it's an
refocus?
oncoming train because they have not dealt with it. So because they're not dealing with the deficit, it is still an oncoming train. There's no question. Doge deregulation and drill baby drill is just not going to cut it. Drill baby drill is about lowering oil prices, which I already saw last year, right? I've been a bear since April of last year, doubled down that it's going to be misinterpreted as recession risk this year, that we're going to fall into that 60 to 40 range. And everyone's like, no. Navarro comes out yesterday and says, we would like oil down at 50. So if crude goes down to 50, there's not a lot of incentive for drilling. But nonetheless, their sound bites really sound good. So Doge really sounds exciting. It's going to save all kinds of money. It's not going to get the money back. But Congress still has the checkbook and the power, and they're saying, Supreme Court also ruled against Trump just a few hours earlier in his effort to stop the financing of U.S. aid, a very, very controversial black hole of money laundering. So the Supreme Court said, 5-4, you don't have the power. Really? Okay. So he's not having a lot of success in getting through this fiscal restructuring. So Doge right now is a donut for all intents and purposes. It has great potential. And it is, by the way, contributing to Trump's layoffs at the government. So we're still talking massive hit to the labor market, because obviously 45,000 out of 90,000 IRS agents, many will think it's a good start, but it's also VA just got hit with I forget how many, 70 something thousand. The point is government is shrinking, but without the spending shrinking, it's just going to hurt us. So we really have to get the deficit under control. The falling energy prices will be immediately seen as a recession risk. Unemployment, jobless claims continuing to trend higher will be seen as recession risk. We don't have deregulation's great, but it's mostly for corporations. And those prices from tariffs are getting passed down to consumers. So everything in the short term is very painful for consumers. It is inflationary in the short term. But longer term, higher prices are corrected with lower demand. So what fixes higher prices are higher prices. So
can he replace? So is he able to replace? He's thinking, well, I'm going to replace, any kind of, he's going to basically fund the tax cuts with tariffs. But then what about the impact on demand? And then so what do you have to do? Raise tariffs even more. So there's this sort of an endless game of this sort of endless spiral that doesn't really work, does it?
I really think he loves tariffs. Like he's really going back to 1919 Woodrow Wilson times. But one thing that I had posted, and I think this is a great chart for anyone who wants to kind of get their arms around, what does this mean recession risk as it relates to fair value and SPX? Because we're not just talking about right now what's happening, which is chaotic headlines on tariffs and yields and, war, conflict. What we're talking about right now is stock market clearly since Wednesday the 19th, because this is exactly when I started seeing underneath, just starting to roll over underneath the surface before the market actually did. Anyway, long story short, it's starting to get nervous about a recession. This is a chart by DataTrek. They do excellent analysis. I always pitch their service. And they are consensus bulls, by the way, because the market, as you are, right, a consensus bull. We have to navigate the twists and turns because we're more actionable. But for the most part, this is what's not getting priced in. Literally, we're up here just a few weeks ago, 62.50, the quarterly JP Morgan collar, what have you, price target expectation. There was not a re-rating of fundamentals based on disappointment in earnings. Now there has been. So as soon as we get PE multiple, can you see this chart okay?
Yes.
Okay, so as soon as we get, PE multiples, especially in the Mag 7, since they're such heavily weighted, see NVIDIA, as soon as they start to come down, and as soon as we get percent decline in 2025 earnings estimate starts to come down, then you can kind of see this matrix. So, we were talking about already 4,700. That's not a huge level of concern. It'll probably pop up like a daisy. But the point is, then the next one will be lower. And then the low will be lower. And the next high will be lower high. You know what I'm saying? So we're gonna start working down through this matrix.
Right. It's that's the problem, is that markets are kind of, as we always talk about, perform at the margin. And the problem is the margin is fraying in a very durable way, as you're describing there. We could be looking at the same way we've been sort of propelled higher by sort of incessant record profits and sort of, against all, the sort of rate transmission mechanism, rates rising from almost zero, not really affecting the economy at all because of all this wealth that's been created. We may see an unraveling of that. So that doesn't sort itself out over 2 or 3 weeks or even a month or two. So that's the problem, is that we may have this sort of headline risk. And then, as you're saying, like the analysts are like lemmings, so they're going to start sort of piling on. And that's our problem with this market. So it really is hard to kind of construct a scenario where, unless Trump just pulls completely another 180, it's hard to kind of construct a scenario where the market can overcome what is not just happening now, but the implication that it has in terms of your chart, your graphic you just showed there, over the next little while. It's our new reality is that this picture has very much changed, and that's very worrisome for markets. So we will see volatility probably. I'm sort of looking, I thought, when we rally into the end of the day, what I did was I was long a number of VIX structures. So the 2030 call spread in March. March is coming to an end. So
Yeah,
so
you have to add some time.
Yeah, you kind of have to be looking at April at this point if you want something that's going to give you a little bit of time. So I've had these March structures, which would have done better if this had happened kind of a month ago. Craig is saying, can you show that chart again and explain the thought? Excellent. And then plus I had some short put, long call, long 21s, 22. So what I did was I sold those out when we were around 25.5 on the VIX. That's not necessarily where the futures are. The futures are a little bit lower than that, right? So, but what I did was I rolled into an upside butterfly. So I rolled that. Basically what that is monetizing some VIX calls that I made money on, and I rolled them into a 25, 35, 45 butterfly. And I think near the end of the day, I think in March you can get those for about 35 cents. I think those are interesting. If we get a little bit more of a pop on the open tomorrow, if you think that we could get a pop and drop, which has been sort of typical, except for yesterday. Yesterday, the big interesting thing was, you mentioned it in your live session in the morning. You said we're finally getting the drop, and then we got the pop. But we've typically been getting these pops and then drops, so we cannot hold a rally for good reason. And I can show everyone in a moment when we switch over, but there's CTA selling, there's vol target fund selling. There is selling no matter what, just lurking below the surface. So I think you're right to figure that this is, I would be very skeptical of these rallies. And on a pop tomorrow, I'd be looking to maybe pick up even some of those marches for a little bit of a reversal down into the 5,700s or low, down maybe a drop of 75, 80 points. And certainly I would be looking at adding some April at this point to maintain that hedge. VIX in the low 20s, given what's going on, that is not bad. And I've always said to people, I've said, listen, be careful with VIX. Everyone thinks the higher the vol, the more you should be selling the heck out of it, right? Oh, expensive options. The problem is low vol, low VIX can be expensive. A higher vol can be actually cheap, given what's going on. It is a relative product. It is relative to the underlying movement and risk that's going on. So be very careful. Do not think that a 22, 23 is expensive, because I do not think it is right now.
Interesting. Let me just show you a chart of VIX and VVIX, because most people think you cannot, technically analyze volatility. It is a structure, it's a skew, it's a this, it's a that. I technically see patterns, everything, and everything. People too, especially people. Anyway, so I just want to show you VIX. Speaking of your cheap, I noticed this morning as well, these August, way out of the money, 42.50, cheap 50 calls with only it was a little lower earlier. It was like 77 with the IV, few 100,000 contracts. Like, they're coming in still, and they're adding time. So they're still planning for a little bit of protection. But the point is, I wanted to say, technically speaking, when this started really in earnest, you could see that Friday, the fateful Friday, the 21st, it was the biggest selling of the year. This actually broke above the 200-day. I'm on a daily. And ever since then, it's really been staying in this nice little structure. Now I have a rule of thumb. It's 1929. Market above is bearish. Market below is bullish. And we're firmly above 1929 in a nutshell. So I also the other day for clients said, okay, I don't scalp, but you do. So I'm going to tell you where it's safe to scalp. And this was, we get VIX back inside. This was literally on Tuesday. We get VIX back inside this 2520. You're going to have a nice market bounce. And that was, of course, NASDAQ 100, 200 day. I mean, there was some basic.
I remember that.
Yeah.
I remember you saying that. Yeah.
So it's really not rocket science to scalp during the day if you've got some key levels, especially in VIX. But I want to show something, and I've shown this to clients for a few weeks now, and I don't know if I showed it here in our live session, but I will anyway. If you look over here, I spied early, and you can't tell now, but this is called a bullish engulfing of VVIX on the weekly. And the day before, no, Wednesday the 19th, was when I said Q's short underneath 539. And it wasn't rocket science. It was a really, really nice level to short against. I can show that. But the point is, I said below 539. And on Thursday, we had some selling. Volatility started coming up. And I said, this looks like on Friday, right here, you can see this wedge on a daily inside of a wedge on a weekly. So it was basically for that Friday, we're going to go up here and tag that wedge. So it was really easy to say on Friday, that Lotto Friday of the 21st, guess what? We're going to have volatility. It's setting up and it's going to engulf this candle, the prior week's candle. So I'm using candlesticks. I love debating people who say you can't technically analyze a VIX chart. I'm analyzing the volatility of a volatility chart. Anyway, the point is, the chances are, and I said that on the Friday when we had the 21st, I said this is very bearish. It's not bullish. It's very bearish the market. So we did follow through. And then just recently, we got right up into this kind of 125, poked above and came back in. And it looks like we're done. But that's not how this works. This can go, for the next few weeks before it gets into that wedge and does it again. But big picture, we clearly had a volatility event, but it was not big enough for my choosing. I don't want just 125 for VVIX. I want what we had back in August. Make volatility great again, and then the market is safe to buy. That's what I'm really, and by the way, oscillators are still bullish. That's a stochastic. It's an oscillator for those who don't know. Today, of course, we had on the aggregate, we had, call buying and put selling. That's always going to happen. But at the time that this was happening, we had massive, and we talked about it on that Wednesday, the 19th. We had a lot right back here on that 539, which just so happened to be a quarterly resistance and a prior week and a prior month. And anyway, it was really easy to say, okay, as long as you stay below 539, Qs are headed lower. And it worked. But the point is, they were also coming in and they were going deep in the money, right? The BRKB 500 puts back, out in August, and they were selling calls. So relatively speaking, back then, 2 weeks ago on this Wednesday, they came in and started buying aggressively puts at the money and selling calls above. That helped the whole market structure give sway. And then you add in all the other stuff that I use, which is breadth and net volume, et cetera, et cetera. But we talked about it 2 weeks ago, how they were coming in and they were getting into that place of protecting. We didn't really know why yet. Then volatility started to come up and then it really got busy, but it's petered out. So honestly, we need a macro trigger. I'm always on that. It's not going to be non-farm payrolls this Friday, I don't believe. Jobless claims will continue to trend higher. We have a week of Fed blackout, but Powell speaks on Friday. And then of course, we just have headline risk and tariff terror, whatever Trump is going to next pump on the weekend for crypto. And it's really chaos, right? And the deficit's not under control. And all the bonds are doing are having a pullback at some key resistance levels. But the market right now still isn't safe. I would love to have a volatility surge that we could then buy the market, like with both hands. And then it'll have a reflexive convexity, short covering, whatever, rip to whatever level. We'll figure it out. But we don't have enough volatility for me to get excited about recommending or getting in here and buying the market. That's it in a nutshell. Make volatility great.
Yeah, I agree with you. And I think the VVIX is actually a little bit on the inexpensive side, given where VIX is and what's going on. So I think it could stand to get going. It's actually kind of a curiosity to me. I wouldn't have guessed it to sort of work out this way, because we have been talking about how that upside in VIX, dealers are really, really short that upside, that sort of convexity. And you would have thought, I would have thought that we would have definitely been over 30, given the sell-off that we had, sort of probably, 7% or so from the highs. Insane, but certainly happened relatively quickly, right? The VIX is about speed sometimes, right? If you look at something like, you've seen sort of difficult markets where the VIX hasn't been as reactive, because remember, it's less tied to a specific strike. It's not saying, well, if the market goes below 5,900, then your puts are worth what they're worth. The VIX, it needs a little bit more shaky. It needs some shake and bake, as you say. It needs something crazy to be happening. It needs velocity. And that was fairly decent velocity there, fairly good, and particularly given the underlying nature of it, the underlying durability of what was going on. I will say, though, that in the short term there, we saw the 9-day VIX really exploding versus the VIX 30. So I like to follow those. And typically I like to see, if you guys want to chart that, you can go on stock charts and look at the VXST, VIX, $ in front of each of those. And you can kind of see that it tends to move between 0.75 and 1.2, 1.25. And a few weeks ago, I was teaching a class and I said, and I was showing them this indicator and I said, listen, that 0.75 is getting a little bit on the calm side. You tend to see that when short-term volatility is so low that 30-day volatility kind of hangs in there. It doesn't want to drop anymore. Almost like realized volatility. When the market gets so quiet, the VIX won't drop from 10 to 9 or from 10 to 6. It will find a floor, and usually that distance between the two is something to be cautionary about. And sure enough, that was pretty close to the bottom. And we got to 120, but just very briefly the last couple of days. So short term, it's kind of needs to unwind. I'd say when that gets closer to 1 again, when that 9-day VIX gets a little bit closer to 1, I think we're going to get another big sell-off. So there's some little tricks you can use in there. That's easy for anybody to follow.
You have a chart of that to show, because I have mine, which I think folks already know is this guy, just for giggles to show. And then you've got,
yeah, sure.
I have basically half a dozen that are right now trying.
Okay, guys, that's just sneak preview. But you see all that stuff? They're analyzing volatility, trying to figure out through that where the bottom is. Very interesting. So this is very advanced stuff. They're talking about VIX, VIX, volatility index, and then VVIX, volatility of the volatility index. And they're talking about like 9-day, 3-month volatility and comparing them and seeing what the spreads are. This is like really advanced stuff. I mean, I don't use it myself, but you know what? If you just listen to this type of stuff more and more over time and try to absorb it, I think it's going to be a lot more useful. This is very quantitative type analysis, I think, when we get there. So let me show you this, right? Like this whole chart here, like she's doing a spread between VIX and a 3-month future VIX. And I mean, one of these days I'll have to make my own version of this stuff, like, yeah, but it's very difficult. I think it's very difficult to understand at a basic level. This is more intermediate to advanced, probably like closer to advanced. And we'll have to see. So yeah, very curious times. Well, you'll need them. The thing is, when the market is calm, you don't need to understand this stuff. You just turn off your brain. Usually just buy the dip, goes up, But when you're in a situation where the market is about to go sideways and you have to pick which stock to buy, and not only within the United States, but now I'm telling you guys to go to Mexico and China. And yesterday I said, like, Europe's looking really nice now too. Usually they don't. They underperform the US stocks, but they've been doing quite well at the beginning of the year. So definitely have to look into that. All right, guys. I got to go to sleep, early, go turn myself in, and then wake up early tomorrow because all the excitement will happen tomorrow. 8:30 Eastern, you'll have your payrolls data. And then 12:30, Jerome Powell will talk at the University of Chicago. And then you have 1:30, the start of the crypto summit, all the way into the close. Anything can happen. Anything can happen tomorrow. It's going to be wild. Wild. All right, guys. Good night, y'all.
feel like I should feel like I should feel like I should feel like I should go. Go. Feel like I should go. Feel like I should feel like I should feel like I should feel like I should go.